Some traders will tell you the best time to take a trade is right into market open, while other traders will tell you that is the worst time to trade. In today's video, I'm going to show you a simple strategy that will help you determine which way the trend will form for the day before the market even opens to create a solid plan to enter an A+ trade. So like I said, in today's video, we're going to go over exactly how to plan a trade before the market opens, and this way you'll be able to tell which way the stock will trend during the day, and you'll be able to get the most lowest risk entry with the highest possible reward. So let's get right into the video. Now, before we start, you need to understand which way the market will trend, and you need to understand how to read market structure. In this video, I won't go into that. However, I have a full video breaking down market structure and exactly what you need to know to understand which way the stock will trend. So after you're done watching this video, make sure to go watch that video in order for you to fully understand how to play the open. With that being said, exactly how do we play the open? So the first thing you need to understand are patterns. There's so many different patterns for traders to choose from. You need to choose your top three. So the main thing for you is to ensure you choose the pattern that works the best for you and in the current market we're in. Now, most traders will focus on way too many patterns, and they'll draw so many different patterns on the chart that they themselves will be confused on exactly what they're looking at. Therefore, what I have seen works the best for most students is to choose 1 to 3 patterns that they can really identify on the chart and they like to trade, and stick to those 1 to 3 patterns. Everything else is just noise. So in this example here, we can see we have a double top, a head and shoulders, a rising wedge, a double bottom, and it just keeps going and going and going. Now, for me personally, I don't like to choose reversal patterns because I'm not a reversal trader. I'm a momentum trader, and therefore I personally like the continuation patterns. For me, what I like to do is have my top 3, and every single time I'll only trade those specific patterns with a break and retest, because as you guys know, that is my bread and butter strategy. So from this chart, you can decide exactly which pattern works the best for you, and you can use that pattern for the rest of the video. However, for people that don't know which pattern to choose, let's go look at some of my favorite patterns to help you understand which ones to choose. My personal favorite patterns, both bullish or bearish, are as follows. Here we can see a flat top. For me, a flat top is a very clear pattern and a very clear sign of continuation to the upside, as long as we retest the previous flat top. In this example here, we can see we have an uptrend and then the stock consolidates, and it's consolidating at highs. This is very important. This means that we're making a very clear resistance, and what happens when we break resistance? It turns into support. And I've said this in multiple videos, so I hope you guys are finally understanding that concept by now. However, we break out and then we pull back to retest that previous flat top, and we make a continuation. This is one of my favorite patterns to trade, especially on the higher time frame. The second pattern that I love to trade as well is a clear uptrend, and then we get a bull flag pattern. A bull flag simply states stock is within resistance. It's similar to a flat top. However, you will see that there is a channel being made, and then we break out. For me personally, I would like a retest of the bull flag if we are trading a lower time frame. However, with the higher time frame, I will show you exactly how to trade that as well. Now, with these two patterns, like I said, I like them either bullish or bearish. So therefore, both these examples that I showed are bullish examples. So the bullish flat top and then the bullish flag. However, you can also trade the bearish flat bottom and then the bearish flag. So for me, my personal preference is to trade the bullish side. I'm a much more aggressive trader when we are bullish. However, when I see these patterns on the bearish side as well, I can also trade those similarly to how I trade them on the bullish side. Now, to trade these patterns and to understand how to trade the open, this is where the real work comes in. It's called the top-down approach. With the top-down approach, we're going to look at the daily time frame. We will then transition into the 4-hour and 1-hour time frame, and then finally we'll go over to the 1-minute time frame. So how would we use the top-down approach? Well, on the daily time frame, we want to look at the candle forming. Now, this is very important. You need to understand how to read price action. I have a full video on how to read candlesticks and exactly if they're bullish or bearish, so make sure to go watch that video as well. But on the daily time frame, we basically just want to see which way the overall direction of the stock stock wants to head. At the same time, we want to see if there is any key level of support or resistance and where liquidity is resting. It's super important on the daily time frame that we mark out levels of support and resistance, as this is where most unfilled orders are. And if we are entering into a trade or looking to potentially exit a trade, we can use those levels of support and resistance on the daily time frame, as they have the most emphasis on the chart. Now, on the 4-hour or the 1-hour time frame, we want to look for the pattern we're trading. In this video, we're going to be using the flat top and the flag pattern, and we want to look on these time frames to see these patterns form. The reason we're looking at a higher time frame, such as the 4-hour and the 1-hour, is because these once again have more emphasis on the chart than the lower time frames. Therefore, if this stock does break out on a higher time frame, that usually indicates that the lower time frames will follow, and therefore we can get a very good risk to reward on the lower time frames. Along with this, we want to see, is the trend continuing or reversing? This is important to see on the 4 and 1 hour time frame, and of course we'll talk more about this when we're on the real examples. And finally, on the 1 minute time frame or the time frame you trade, this could be the 5 minute, the 15 minute, or 30 minutes. Every trader trades on different time frames. For me personally, when I'm playing the open, I like to use the 1 minute time frame because it is very volatile, and therefore the 1 minute allows me to see the most price action during the first 15 to 30 minutes of the open. However, on whatever time frame you trade, we want to look for a high risk to reward entry. Now, this is important because playing the open, you can get the best risk to reward entry possible, because if you can see a pattern and if it does break properly on the higher time frame, you can enter the stock essentially at the bottom of the day and ride that momentum throughout the day. And therefore, this is exactly why this approach is so beneficial. Now, it is important on the 1 minute that we wait for a strong candle to enter. This means either if it's bullish or bearish, we need to wait for a strong candle to enter and show that buyers or sellers are there and they're controlling the stock. We can't just enter blindly off of any candle, because this would decrease our risk to reward, as we don't know exactly where to put our stop loss. Now, why does this strategy work? Well, this strategy works because we can take a trade right into the market open because of the higher time frame, and it has more emphasis on the chart. If you don't know why I keep saying that, it's because most traders, especially bigger hedge funds, are not looking at the 1 minute or the 5 minute chart. These institutional traders are looking at the higher time frame, they're looking at multi-day runners, and therefore they're going to have their orders on these higher time frame levels. Therefore, if the trend or pattern breaks, the stock will offer a much bigger potential move than it would have on the lower time frame. And if we are able to enter the trade before or a couple minutes after the pattern breaks, we can ride that momentum all day, and we can have the highest, like I said, risk to reward. And therefore, if you can even nail 1 to 2 of these trades per week, that's all the trades you need to become a profitable trader. So with all this being said, you now know how to play the open. So let's go look at some real examples. On this example here, we're on Apple, and the first thing we want to do is look at the daily time frame. Now, on the daily time frame here, we see that Apple was in a downtrend. However, we broke out on the daily time frame, and now we have a lot of room to the upside. On the last previous candle, we want to mark out the high and the low of the previous candle. Now, what this will do is it will indicate where the most liquidity is sitting, which is at the previous day high and the previous day low. When we're looking at this candle, if you've seen the price action video, you understand that this is a bullish candle, and because we've made such a strong move up, we can continue to look for continuation. Now, let's go on over to the 4-hour time frame. On the 4-hour time frame here, we can see, if you understand market structure and you've watched that video, that we actually have a change of character. We're breaking to the upside. This is a very impulsive move, and now we're consolidating. So because we understand this on the 4-hour time frame, and there's not really any other pattern that we can look for, we can hop on over to the 1 hour. On the 1 hour time frame, the first thing that I notice is this flat top. So we can kind of change this daily time frame because this flat top has a little bit more significance, and we can see that this is a flat top being formed. Therefore, what we need to do is break out of this flat top, and we can expect a continuation to the upside. So for us now, all we have to do is wait for the stock to essentially break out of this level, retest, and then make a continuation move to the upside. So let's move on over to the 1 minute time frame. And on the 1 minute time frame, before the market even opens pre-market, we can see that on the 1 minute time frame, we actually broke above that flat top pattern. This shows that we do see that continuation into pre-market and we're actually getting a retest. So for me, the best entry for this scenario would be a retest or a dip back into this previous resistance turn support, because we know there's a lot of liquidity here and buyers want to get filled near this level, and then obviously a continuation to the upside. So let's play out this trade and see exactly what happens. And right here on the second candle of the day, we can see that we got that retest right into our level. And at the same time, this is a very strong candle. This is a hammer candle, and this offers the best risk to reward. So how would I enter into this trade? Well, the first thing that I see is this 190 psychological number. This number correlates with where most buyers and sellers are putting their orders because it's a whole number. It's also a psychological number. And then for my stop loss, I can simply have it a little bit below this previous candle. Therefore, if I enter this trade here, this would be a 2.02 risk to reward trade. Let's enter into the trade here and see exactly what happens. Now, as we can see, this trade did take a little while to work out. We actually did come back to our entry model. Therefore, you could have entered more into the trade here. However, this was a $755 trade. Now, if we wanted, we could have potentially scaled some out at this 190 level and then look for our final profit targets at, of course, that pre-market high as well. However, we would have to hold through this trade a little bit longer. Therefore, in this model, I just wanted to show you how to use the psychological numbers as well. However, if we did want, we could wait for that higher profit target as well. And like we see here, it did hit our higher profit target. However, we had to wait through a little bit more chop and we would have been done the day at 12:40 rather than finishing the day at 10:56. And if you guys have watched my videos for a while, you guys know I usually like to trade the first 1 to 2 hours of the day and then let my trailers work for me and call it a day. However, this was a great example of understanding exactly how to play the open and getting the best risk to reward and letting those trailers work for you with that momentum. Now, let's go look at one more example. In this example here, we're on NVDA on the daily time frame. On the daily time frame on NVDA, we can see that we are in a very clear uptrend and we actually made an inside bar. If you guys don't know what an inside bar is, you guys can go check out my inside bar strategy video. I have a full strategy video on this, but essentially, if an inside bar day occurs, whichever side we break to usually has the most momentum. Now, on the daily time frame, we can mark out these levels. We can also mark out the swing high here because it is fairly close, and also the previous day low as well. And that's about all the levels that we're going to mark out for the daily time frame. Now we can hop on over to the 4 hour, and on the 4 hour time frame, we can see we made a very impulsive move up. We're now consolidating and we're actually making a flag pattern right here, and we're currently trying to break it pre-market. Therefore, we can hop on over to the 1 hour time frame, and on the 1 hour, we can see that we are breaking that flag pattern to the upside. Therefore, we would be looking to wait for the stock to break above this 549.59 level, which is the previous day high, and then simply retesting that level. Or it can also retest this flag pattern. We'll have to see how the market actually opens up. Let's go on to the 1 minute time frame, and as we can see here on the 1 minute time frame, we actually did break above that previous day high on the 1 minute time frame. We also broke above that flag pattern. Therefore, what I would be looking at here would be simply to open up, retest this previous resistance turn support, and then make a move up to that previous pivot high we had on the daily time frame. Now let's open up the day and see exactly what happened. So on the first 1 minute candle, we can see that we came in, we retested, we closed the candle green. Now, this isn't the most bullish candle possible to enter on, but because both the higher time frames align, on the 4 hour, we broke out of the flag pattern, and on the daily pattern, we broke out of that inside bar. This is a great candle to enter in on, even though it's not the most best and bullish candle scenario. Because of all the other factors, this would still be a very, very good entry. So we can enter into the trade here. Now, our stop loss here would have to be a break back below this previous pivot level. So our stop loss would be down here, and our profit target would be at that 553.60 level. Now, this would only give us a 1.2 risk to reward trade. You guys know that I usually like to aim for at least a 2.0 risk to reward trade. Therefore, we could move this risk to reward up for at least 2 points right here. This would correlate with the 556 level right here. However, this is for me because I like a 2R trade. Within your system, if you have a higher win rate, you can also have a lower R multiple, and you can use that 1.4R trade. So let's enter into the trade here and see exactly what happens. All right, and just like that, in 1, 2, 3, 4, 5 minutes after the market opened, we're already done our day and we made $2,682 by understanding the inside bar, understanding the pattern on the higher time frame, and also understanding price action. Now, I hope this video helped you understand exactly how to play the open and not get faked out. If this video helped you, make sure to leave a like. If you have any questions, put them in the comments down below. Make sure to follow me on Instagram and Twitter for more education, and I'll see you guys next week with a brand new video.